In 1999, the gold market rallied at the start of the year before settling into a range. So is history repeating itself? According to our next guest, it just might be. Joining me now in studio is Oppenheimer's Ari Wald. Ari, thanks so much for being on the show with us.
Good to be here.
So is gold seeing a repeat of 1999? What are your thoughts, Ari?
We think it is. Now, we think the longer-term trend is indeed reversing higher here. I guess the message, though, that we've been conveying to clients is that tactically, now is not the time to be playing for that. And what I mean by that is that over the past few weeks, gold has rallied a lot in a very short amount of time. In fact, it's about 11% above its 200-day moving average. Along with being overbought, it's also testing some resistance from its 2015 peak at around 1,300. So we think it's due for a pause to refresh first. And I think with that pause, you could see downside risk maybe to the March low somewhere around 1,200.
So Ari, you're seeing gold range bound here for the rest of the year between 1,200 to 1,300?
At least over the coming months, we think it's going to be range bound while some of these overbought excesses do reset. But I think pullbacks can provide buying opportunities given the more constructive behavior we're seeing in the longer term trend.
So longer term, are you more constructive? Do you see it breaking through this 1,300 that it's really struggling to get to here?
We think it can get there, and that comes back to the similarities to 1999.
Okay.
What we saw this year is gold reverse a multi-year downtrend. You know, this decline that it's been in, it is reversing higher, very similar to the reversal of the downtrend that occurred in 1999. If you look at the charts, and back in 1999, though, it wasn't off to the races. Gold needed to settle back into a trading range, form that base before the uptrend developed. We think similar behavior is going to develop here for gold currently.
And what about the US dollar? Obviously, it's closely correlated to gold. So do you also see the dollar sticking to a range here?
I think that's a really important factor right here. Gold rallies for three reasons. One, based on a weak dollar. Two, on inflation expectations. Or three, as a safe haven asset. More recently this year, it's really been dollar weakness that's driven that strength. There's an inverse correlation there. And if you look at the dollar has declined. It's retraced 38% of its prior advance. We think this is a level where you can see an oversold pop, a bit of a relief bounce, if you will. I think that could provide a near-term headwind to gold, and you'll see gold maybe settle back in the near term.
So what do you suggest investors do with gold at this level? Do you touch it here?
It really depends on your time horizon. From a near-term trading basis, no, I would be looking to buy the dips rather than buying the rips here. From a long-term standpoint, I think you can hold on to it if you're okay stomaching some near-term volatility, because I think longer-term, the prospect is much brighter here for gold.
All right, Ari, we spoke gold, we spoke USD. Let's conclude this trifecta with silver, which really has had a good run here. How do you see the metal set up?
Very similar story here for the price of silver. Overbought into resistance, seeing some signs of exhaustion at $18 at resistance, about 15% above its 200-day moving average. But on those pullbacks, I think $16 is your floor. Buy the pullbacks in silver as well.
All right, $19.99 for silver as well?
I haven't. I have to go back and look there, but similar story in the overall commodity complex. I think after several years of decline, we're at a point where
I'll avoid any Prince references as well. Thanks so much, Ari, for stopping by.
My pleasure.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.